Hi guys, Ben here from Motivation to Invest. In this video we're going to be looking at legal and illegal insider trading or directors' dealings and why you should be following it. Now, common sense states that the person inside the company will know a lot more about that company than people on the outside. But how closely should you follow these insiders? In this video we're going to find out. Let's dive in. Coming in, flex, I just wanna win. Before we get started, go ahead, smash that like button and subscribe if you haven't already. Be sure to turn the notification bell on, that way you'll get notified when I release future videos and stock picks. It's good to be first on the scene when an interesting stock is at a great price. So what is insider trading? Insider trading is where members of the business board, such as directors and CEOs, buy or sell shares in the business. They must report these transactions to the stock exchanges or the SEC, Securities Exchanges Commission in the US. According to the SEC, an insider is a director or an individual who owns more than a 10% stake in the company. So should you be following these insiders? Well, in general, you would think that the people inside the business, mainly on the director's board, will have a lot more knowledge about how their company is performing and how optimistic they are about their company performing great in the future. If they are very confident in their company's performance, then you should see them buying shares. Also, if they see the share price of the company to be undervalued, you may also see these insiders buying shares. Conversely, if they see some relationships or some projects breaking down and they see things aren't going too well, then they might consider selling off shares. However, this is where you need to be cautious, because also they may consider selling off shares if they consider the shares to be overvalued and they know the market will correct very soon. Now, many studies have shown that following insider buying can give you a superior return on your investment. So always check this factor before investing. I use a website such as simplywallstreet.st to research the insider trading of a company before investing in them. However, I believe this should be used in conjunction with your existing investment strategy. Do not follow these insiders blindly, hoping that they are right, because at the end of the day, they're making an estimate, and if they are very, very exact about their company's position, then this is illegal insider trading. So what is illegal insider trading? Now, not all insider trading is legal. And according to the SEC, illegal insider trading is the illegal use of non-public material for profit. Now, the key there is non-public. For example, if a director in a business saw that the business had just won a massive contract and he knew this would help the business's bottom line, and then instead of disclosing that information publicly, he initially bought a massive amount of shares, envisaging that the price of those shares will go up once that information is made public. Now, that is illegal insider trading. Whereas legal insider trading is where someone on the director's board has a hunch or an estimate about how well the business is doing. This could be a general hunch and an estimate of the business's performance, and they may be optimistic about their business's outlook, or they may say, okay, we've been running this massive marketing campaign which is public, we've got a lot of leads coming in and we know our sales cycle's coming close to the end, therefore I could make the prediction that we're going to do very well from this campaign, and thus it's going to help our profit margin, thus that will help our share price. So me, as a director on the board, I'm going to buy more shares in my company now. Now, that is completely legal because it's based upon an uncertain event. Now, the sales and marketing campaign is going really well. However, something could happen in the meantime which may affect that. Also, the information is completely public. So everyone else knows this information. They know the business is running the sales and marketing campaign. So even the public and stock market analysts can have the same chances of purchasing shares in the business during that time. So that is legal insider trading. I like to call this an educated hunch. So are the insiders always right? Well, no. Sometimes they're right, sometimes they're wrong. The studies show that following insiders that buy will offer you greater returns. but they're not always right. For example, the sales and marketing campaign that the business is running could seem very successful in the short term. However, there could be a major issue. A competitor could start running a similar campaign which would greatly affect their conversions on their sales and thus their profits and share price. Don't follow the insiders blindly, but just use it as another signal to help you with your investments and trading. So what are some other versions of illegal insider trading? Can't the director of the company just tell their friend the information and get them to make the trade, or tell their family member or their wife to go make the trade for them? Well, this is also classed as illegal insider trading, as still the family member, the friend, and even the person on the street is still using non-public information to gain a profit in the stock market, which is illegal. For example, if a CEO is having a haircut and he inadvertently tells the barber about his quarterly earnings, how well or how bad they were, and then the barber decides to write this information down and then go and make a trade based on that information, that is classed as illegal insider trading. Now, the odds of the financial authority finding out about this information is very, very slim if the numbers are small. So how does the SEC check for insider trading? One of the main ways the SEC checks for potential insider trading is to look at trading volumes of the stock. As they know, when a business releases its quarterly earnings, the volumes increase massively. So when the authorities are watching the trading volume and they see a massive rise just before the earnings are released, or a few weeks before, let's say, then that could raise a suspicion with them that there could be some illegal insider trading going on. Of course, they're looking for substantial amounts of stock to be traded. Famous example of illegal insider trading is Martha Stewart. Martha Stewart, the US cooking personality, sold 4,000 shares of the biopharmaceutical company Imclone after she'd received a tip-off from the CEO regarding the fact that a certain anti-cancer drug had not been approved by the FDA. This caused the share price to fall by 16% in one day. However, as Martha had sold her shares before the information went public, she had committed illegal insider trading. She saved $46,000 by selling early, but federal investigators went hard and she had to serve 5 months in a federal corrections facility. So they do take this quite serious. So what are some tips for following insider buying? Now, in general, you can use insider selling and insider buying as signals to help you make a decision or help increase the weight of your trade when investing. However, I wouldn't concentrate too much on insider selling unless you see a periodic dumping of stock over a period of time, which may signal that the company is in real trouble. However, if you just see a one-off sale, then I wouldn't worry too much about that, as that could be for tax purposes, it could be because the CEO wants to purchase a house, it could be for many, many reasons. However, if you see numerous sell-offs or over a period of time, then you should be worried. In general, there are 5 factors which you need to look out for when following insider buying on a stock. This can help you make a correct decision when investing into a business. Factor number 1 is to check the volume of insiders buying. For example, if just one insider is buying back shares, that is not a very large signal. However, if 3 or more are buying back shares, then that is a much greater signal. You also want to be looking for large transaction values relative to the business's market cap. I'm talking $1 million, $2 million, $500,000. You want to be looking for substantial amounts which have been purchased. You also want to assess the insider's salary and how much of a personal commitment that buyback is to him. The greater the personal commitment, the stronger the signal it is to you as an investor. This brings me neatly onto factor number 2. You also want to be checking the level of insiders buying in the company. Is it the CEO? Is it the CFO or the Chief Financial Officer who is buying back these shares in the company? If it is the CEO or the CFO, that is a very strong signal to you that the company could have some major positives coming up in the future, as those are the people in the business who know the most about its future prospect. Factor number 3 to look out for is the reason and the market. Ensure you research the company thoroughly and understand what potential reasons there might be for them buying back shares at this time. For example, if a business has made a recent acquisition and they can see things are integrating really well, then they may envision that this will help their future profits and thus their share price. Or you may see that the business is running a new business strategy or a new marketing campaign, and thus that is the reason that the director, CEO, is buying back shares at this time. This brings me on to factor number 4, which is to look at the share price, look at the valuation and timing. Like I alluded to earlier, if the business is undervalued, then you can imagine that a lot of people on the board will be buying back shares as they know their company share price will increase in the future. Conversely, if the business is overvalued, they may resist buying back shares during that time or even sell off. This brings me on to factor number 5. If insiders are buying back shares in a smaller company, this is a greater signal to you as an investor, as the directors and the CEO of a smaller company will be much more aware of every department, every office, every different branch of the business. Thus, they will know exactly how the business is performing, and thus their decisions will be based on a more educated platform of information. However, in a gigantic, larger market cap company with thousands of offices or thousands of retail stores, they may not actually know what is going on in each individual store or how each branch is performing as well as someone in a smaller company. This is why the buying signal is much stronger for smaller businesses. The smaller the business, the larger the buyback, the greater the signal. That's my motto. Now, a little tip when following insider buyers is to hold your investments for the long term. That is at least 2 years. The studies showed that people who followed the insiders and held their stocks for at least 2 years saw the best returns. Overall, you should always check insider buying and insider selling before investing into any stock. However, do not use this solely to make your decision, and instead use this in conjunction with your existing investment strategy. And remember, the larger the transactions by a higher level of people in a smaller business offers a much greater signal than in other scenarios. So use this insider buying information in conjunction with your own existing investment strategy. Ensure you research the business both quantitatively and qualitatively. Understand the business's balance sheet, understand their debt levels, understand their PE, price to earnings ratio, understand the business's valuation, understand every aspect of the business, and this insider trading is another signal for you to use to help you make an informed decision. Now, I did another video on how to analyze a business both quantitatively and qualitatively, so be sure to check that out on the link below. So what do you think of insider trading? Comment your thoughts below. And if you enjoyed this video, go ahead, smash that like button, and definitely subscribe. See you next time.
Coming in, flex. I just wanna win.